Well, folks, the TREB numbers for October are in, and they're in quite early, and I'll give you a reason why. The bond market seems to be coming off of its highs, and all this and more from Cancun, where I'm at the Centum Summit Conference at Planet Hollywood. So I'm happy to join you. It's episode 154 of the Wise Old Owl Show. I've been asked a few times, maybe a couple dozen times by folks saying, are you going to have your show this week? And I said, absolutely. Every week, 4 o'clock. It's 3 o'clock here in Cancun. And I want to make sure I don't miss an episode for you folks. So TREB comes out with their October numbers on the 2nd of November. Why so early? Because there weren't many sales to count. A total of 4,646 sales in the month of October, a record low for quite some time, and only 4 more units than September, where we had 4,642, I believe. So not good numbers. A lot of listings popping onto the market. I think we exceeded 19,500 listings are on the market. Not a lot of sales, so we're almost at a 4.5 to 1 ratio. Not very good. And quite frankly, I believe that a lot of sellers aren't being realistic with their prices and have yet to realize that folks that are looking to buy just can't afford what the expected value is at these interest rates. So we're going to continue to see very sluggish sales numbers over the course of the next few months, and probably an increase to listings to give more buyers choice as they start seeking out an opportunity to buy. Now, good news on the bond market front. The 5-year Canada bond dropped below 4%, sitting at, where are we? 3.947 as of this afternoon. Very promising, dropping down below that 4% mark. Dropped as low as 3.9 early this morning, and it rallied back up to about 3.95. So good news on the fixed rate front. Probably a lot of sighs of relief from folks who are looking to renew. And as we know, the numbers that are renewing over the course of the next few months are in the 100,000 mark per month. So those folks could rest assured that rates could probably be leveling off and not be going up, which is something that they all feared. So let's hope that we could keep an eye on where rates go and they work to everybody's advantage and try to lessen the shock of folks that are renewing in the next few months. Interesting conference. We are in Cancun, as I mentioned, at Planet Hollywood for the Centum Summit. Hats off to Chris Turcotte, Carolyn Rapson, Jeff Sampson, and the team for putting on a great show. I took part in an advisory council yesterday and have had an opportunity to talk to brokers across the country, as well as lenders and the executive teams of lenders that we do business with, trying to get a handle as to what the outlook is, what they're experiencing, and what type of solutions they're hoping to come to the table with over the course of the next few quarters and next year. All the big banks had their year end October 31st. They're now entering their fiscal year, and they're hoping to bring about some new products, some new opportunities, some new solutions for people. And it's quite exciting talking to them. And we have a few more meetings set up in the next few days where we're going to continue to understand how they want to position themselves in this current marketplace. It is sluggish. There's no question that as we go across the country, different markets are experiencing different things. The Greater Vancouver market and the GTA market are very, very impacted negatively as far as sales are concerned. Affordability is the issue there. But as I talked to some colleagues in Calgary, Gord Appel from Axiom, Scott Tremblay from Saskatoon, Clinton Wilkinson out in Halifax, they're all telling us that the market is strong, values of homes are more affordable, And when you have price points that are in the $400,000 to $700,000 range for a home, as opposed to $1 million plus in GTA, it's a lot easier for qualifications and people getting mortgages approved. So it's a tale of two situations across the country. The smaller markets still are very robust, and the larger markets are going to continue to struggle due to affordability. Very, very interesting to get a grasp of what different brokers and lenders are experiencing across the country. Now, one thing I will point out is the lending community is eager to do what they can to help this affordability issue. I was talking to Damon Knights from Equitable EQ Bank, and he was eager to remind me that they introduced a 40-year amortization. Although it's a third-party investor, it's a tool to help people qualify that can't get access to funds under the stress test that the regulated lenders have to deal with. So we have that. We have a community trust talking about renewal opportunities and things they're going to launch in January to help those folks dealing with renewals. And it's really interesting to see that people are trying to step up the creativity and the solutions for the marketplace and the clients within it that are struggling, because it's clear that the message over the last 6 months has been pain, struggle, and difficulty accessing funds in the prime and alternative space as we start seeing a shift of folks going into the private and alternative lender market more so than the prime. Not a lot of graduation of clients moving up the scale. Everybody seems to be moving down. We're moving in the wrong direction as far as I'm concerned. And we need to curb that and reverse that trend, because it's just not feasible long term. People are supposed to improve their situation, not be in a worse one. And over the next 2, 3, 4 quarters, we're going to continue to see pain as more and more folks up for renewal struggle with the shock of the increased payments. So we'll keep an eye on that. We'll definitely try to help folks with some solutions, and we're confident that we're going to see some interesting new developments on the horizon to help these folks out. The federal government's making some changes to policy. We're hearing the Minister of Immigration comment that maybe they have to deal with immigration. Surprise, surprise, like what the fuck? 8 years to figure that out? Like, this is starting to get a little bit comical, and we need some adults at the table to make decisions that put this country at the level it needs to be to compete on the global scale. We continue to see dumb decisions from this government on manpower. No one's looking after the gate, okay? We continuously see increased levels of folks entering this country without the infrastructure and supports to support them. That's a problem. And we're in this mess because no one's been paying attention to it up until now. So we definitely need some help in that regard. We need some people to grow up, and we need every level of government to align themselves to help provide a comfortable and reasonable level of infrastructure that people come to expect. Like, this is getting ridiculous, folks, and we need help in that regard. We need our politicians at every level to be more accountable. We should demand better, and anyone that doesn't seem to answer the questions or rise to the occasion to serve Canadians should be ousted. Vote, make your vote count, and if anybody has been subpar, there's no reason to keep them in that position, regardless of their political stripes. Canadians need more accountability. We got the wrong people at the table, and these folks are really fucking things up for this country. I'm sorry, it's frustrating because I see the pain and the struggle of Canadians and homeowners every day. I'm hearing it from colleagues at this conference of folks really struggling, and we need to reverse that trend. So I'm hopeful that we could see some progress, and we could start turning this thing around. It's going to take a while. It's going to be painful, and there's probably going to be a lot more pain before there's any improvement. So buckle up, tighten the chin straps, and be prepared for what's coming. Not sure if anybody has any questions today. I don't have my helmet and that has all my questions from you folks in it because I'm in Cancun. Okay, we got a question here. Ashish, I can't pronounce that, I'm sorry. Are you anti-immigration? Curious. No, I'm not anti-immigration, okay? I just think that immigration has to be done in a responsible manner. If we want to open doors to the world, we should make sure they have a fair shake of surviving in this country, okay? Everybody that comments on the level of immigration, the lack of support and infrastructure, always comes out with this fucking anti-immigration tag. And that just isn't the case, okay? My parents were immigrants. I'm a son of an immigrant, and when they came here, they had opportunity. They had opportunity where hard work was rewarded. And people today that come here are put behind an 8-ball, and they can't succeed. Okay, so let's make that very clear. It's not an anti-immigration position. It's simply facts. You want to bring people in here, the federal government should be aligning with the provinces and the municipalities so that the infrastructure is here to support them and give them a fair shake at life in Canada so they could prosper. Okay, so I want to make that very clear. Okay, like I'm tired of the bullshit and the wokeness and all this stuff. I was at TD Bank today and asked the small business guy if he will get any foreclosure lists, and he said the branch don't get them any longer. Thoughts? Folks, there's not a lot of foreclosures yet. Okay, the cracks are starting to appear, but there's not a whole lot of foreclosures just yet. People are becoming a little bit more aware of their situation and getting ahead of it. We're coaching people that are struggling to get ahead of this situation. Many are seeking help from family members and friends, and we're not necessarily there yet. We will start seeing some cracks. You have to remember, the delinquency rate for mortgages at the Canadian banks are at about 0.15%, okay? Very, very low. And even if they double to 0.3%, it's still insignificant in the grand scheme of things. Where you're seeing struggles are in the private lending sector and the alternative lending sector, where rates are considerably higher and more cost prohibitive for people to make. So that's where you're seeing a lot of foreclosures. And as far as foreclosure lists, they're not going to be sharing that stuff at the branch level. They have to go through proper processes to make sure that they are disposing of the property in an equitable manner. They have to do 2 appraisals at a minimum, and they got to make sure that they proceed in a cautious manner to make sure that they're not just giving things away. Okay, so there is a process to follow, and I don't think you're going to be getting any foreclosures at branch levels. It's not even at that point. Everything's been centralized these days. Thanks for the question. Do you see prices of homes coming down, Vince? That's from David Ricci. Listen, I don't see them going up. Different pockets are going to be impacted differently. The highly sought after areas are going to do well. Listen, it's all about expectation. I think, there's going to be a balance between what people can afford and what people are expecting to get. And there still seems to be a bit of a disconnect. A lot of people that are selling are still expecting last year's prices, and people that are wanting to buy want a deal. So how do you bridge that gap? There's still a lack of sales. I think there's capital on the sidelines ready to pounce on opportunities, but they want deals. So until those two expectations match, there's not going to be a lot of sales. And I just don't see there being a lift in values until interest rates are impacted and moving lower so that affordability can be increased. Now, if they look at adjusting the stress test at all, and I've always been a big proponent of the stress test. I think it served its purpose. And I think now that we're at this level where we may be at the top of the market interest rate wise, and we will be here for a long period of time, maybe it's time to eliminate or partially eliminate the stress test on 5-year fixed terms. Yes, if you want a variable, maybe you should still qualify under the stress test, or if you want a 1 or 2 year, you should use a stress test. But if you're going with a 5-year term, maybe you don't need a 2-point buffer, being at the top end of the interest rate scale, or at the the higher end. Like we still may see rates go up. I'm not sure, but there's got to be something done to allow folks to do something to increase affordability. Now, there may be a situation where the stress test is removed on renewals on all mortgages. Right now, it seems like there's this opportunity where the stress test doesn't need to be used if you have an insured mortgage. And one thing I've been asked at this conference is, Vince, do you think it's fair that insured mortgages, folks that put less than 20% down, have an advantage to shop their mortgage more so than someone who's got a conventional mortgage and have put down 30 or 40% down? And the answer is no, it's not fair. But that's the way the system works, and as these mortgages are insured, they have that provision where a stress test isn't required, as long as it's a straight transfer and no additional funds are being added. But there is room to maybe look at removing the stress test on renewals in its entirety if you opt for a 5-year fixed rate. So we'll see what happens there, and it will provide some opportunities for folks, and hopefully we'll see some movement on that front from the feds and OSFI and the Ministry of Finance. Also, your thoughts on pre-constructions closing in 2025. Well, let's just hope values hold, appraisals come in, and people who bought these things can still qualify. If you're talking about low rise that are built within a year and a half, hopefully these folks did get pre-approved. If they are of the high rise vintage, you could be screwed, okay? Because you probably bought these things 2-3 years ago when rates were at rock bottom, and you were anticipating that rates were going to be at that level, and we're seeing the pains of folks not being able to close. There's an article today, I think it was in the Globe and Mail. Many people are walking away from their down payments on these pre-construction properties because they can't qualify, and risking legal action. And it'll be interesting to see if these builders just pocket the deposit and sell them for less, or if they actually go after the original buyer for breach of contract and sue them for not going through with the contract. So it'll be really interesting to see how that plays out. We're going to see a lot more of this in the next few months. Shanusa, I need employees, but welfare paid more. So, okay, is that a statement? There's no question there. Can't really help you. Cats 067, considering we're in a recession, do we see the rate cut soon? Folks, predicting where rates are going is very difficult. What I will tell you is our dollar's taking a shit kicking. It hit 72 cents. I don't think we're too far away from 69 cents. And once we hit 69, it could go a lot further down. If that takes place, the imports into Canada are going to go up. Prices will go up. That means inflation could still be at levels where it becomes sticky. If inflation persists at these levels, rates aren't going anywhere, okay? The prime rate isn't going anywhere. So those folks in floating rates, variable rates, lines of credits, people are carrying a lot of balances on those HELOCs, they're going to struggle at the 7.2 level, okay? It's just going to be very, very painful. Now, what will the bond market do? Will the bond market continue to fall? That impacts fixed rates? We may see a situation where fixed rates probably move a little bit further down, but the variable could stay high. All something we're going to watch, we're going to continue to monitor and help you work through what best option is there for you. It is going to be tough. You have to respect the lag. It takes a while for shit to happen, and we're starting to see the impact of these high rates right now with renewals. People wondering whether they should go short-term, long-term. They're in a quagmire. They're trying to figure it out. And it's not easy to figure out because of the uncertainty in the marketplace. So we're really going to keep an eye on it, and hopefully we get some relief. But this is what I caution people. We're going to be higher for longer, okay? It's not good news. I'm not the bearer of fucking unicorns, kittens, and rainbows. It is going to be tough, and people need to realize it's going to be very, very difficult. Kathleen _ wealthplancoach.ca. What advice do you have for a pre-approval for pre-construction? Take the lender cap rate that is on site. If you're dealing with a bigger lender, chances are they have a lender who offers a construction financing doing residential cap rate mortgages. They're not the most attractive rates, but what they do is it's an insurance policy that if rates go up, they're going to guarantee that cap rate. So if you are looking at a pre-construction, try to deal with a reputable builder, and reputable builders usually have lenders on site that offer cap rate mortgages, or some builders are offering their own in-house products where they're buying down rates with lenders and stuff like that. Make sure you get in writing, make sure your lawyer reviews the documentation, make sure you protect yourself. And God forbid rates go up further, that puts you in a more difficult position where you buy and you don't get that pre-approval and capped rate. Okay, so just be wary of what you're doing and make sure that you have peace of mind knowing that you will be protected. Sabrina Policelli, this lady, I want to say hi to her. She always kind of comments on my posts, and I don't know her at all, but thanks for joining. Really appreciate it. And keep the comments coming. Always appreciate it. I want to thank the Centum Group. They made this custom ball jersey for me for OwlMortgage.ca. Got my name on the back and stuff. Really cool. Nice little surprise for participating in their advisory council. And, it's been a wonderful time here in Cancun. I get really excited being able to have all the lenders in one place and having discussions with them about what is happening, what they're planning to do, what they anticipate is going to be happening. And the reality is many don't know. Many are hopeful. Many are trying to anticipate that the market will continue to be the way it is. But the brokers out here, they're wondering how they're going to make it, especially the ones in the bigger markets where volumes are slow. And I want to thank all of you that watch on a regular basis, all the folks that DM me, all the folks that email me and keep me busy, because I really, really appreciate it. I'm hoping I can help everybody. Sometimes for those that are out there struggling, the truth is they got to get out. And, I'm going to try to come up with the best solution. And sometimes it's not good news. And what I will do is always give you my best recommendation and advice. Sometimes it's not what you want to hear, but I hope that you take it seriously and strongly consider it, and not just run into people that tell you what you want to hear and just puts you in a worse position. So on that note, I'm going to call it a show. Hold on, there's another question here. Sorry, before I wrap it up. From J. Blair 24/7. Are Micks and other private lenders seeing redemption from their funding sources? Do you see risk of any of these funds gating withdrawal? Well, there are a few Micks that have gated withdrawals. Romspin is one of them. We are seeing some interesting activity from some of the bigger Micks looking to raise money and offering some interesting promotions in doing so. There obviously is a lack of capital for some folks, and that has to do with the lack of mortgages paying out. Micks traditionally are short-term mortgage facilities. They're mostly one-year terms, and they're expecting to get repaid within that term, but most are offering more renewals than ever. And to give you an idea, I run a Mick. Traditionally, Micks would see a 70% turnover rate. So that means 70% of the mortgages are paying out at the year's end. That's actually been reversed. We're only seeing about 30%. People can't get out. People can't refinance. The stress test isn't giving them the opportunity to refinance and graduate back into that alt or prime space. So it's becoming difficult for Micks. So as I mentioned, Romspen has gated their MIC, which means people aren't able to redeem temporarily. And I think they've also, if I'm not correct, and people could correct me if I'm wrong, I think they've suspended their dividends. So not sure why. I haven't really read into it, but that's never good news. That's the only one that I know of because they're, I believe, publicly traded and they have to report. So I think that was in the news recently and you could check that out. But I don't see a lot of withdrawals. As a matter of fact, in my MIC, we're getting a lot of folks that are getting their equity statements, not happy with them, and want to invest in the MIC because they have registered funds and are looking for a better return. Is Tiff in Cancun? No, he's not in Cancun. He is not here. But maybe he should have. Nikki Tadeo, we appreciate you, Vince. Thank you. Thank you, Nikki. Haven't seen you in a while. You got to come by for a coffee. It's been a while. So whenever you're in the neighborhood, please come by. The Nikki Sayers, Norm, one of your brokers is the best. Oh, Norbert. I think you're talking about Norbert. He's a great guy. Love Norbert. He's been with me 22 years. Hey, Mr. Valensky's joined us. Boy, this guy's had a rough few weeks. Vadim has been a regular on this show, always tuning in, making a comment. I've never met Vadim, but he's had a rough go of it. He's had a tough time dealing with his post about the Gaza Strip thing. I don't know if anybody's heard about it. Really tough. Been canceled. The guy's been canceled, and he's taking it on the chin. I think he's probably learned a few lessons about that exercise, and I saw his post where he issued an apology, and if people are interested in that, I tap his account and kind of listen to him and see if it resonates with you. But you know what? Hats off to him for putting the apology out there. I think he realizes how damning and maybe not appropriate the post was, and I'm sure he's learned a lot the last few weeks. So I appreciate him coming in. But hey, keep your head up. There'll be better days ahead. Okay, so thanks for tuning in. Fresh 514. You think houses will decrease considering higher rates and less supply? Yes, possibly. We're going to see that. You know what, guys? Thank you so much today. I thought no one's going to tune in. Different backdrop. I'm in my room. I tried to do it outside. It's very windy here in Cancun, so you probably wouldn't have heard. So on that note, I'm going to wrap it up. I want everybody to think about what's going on out there. A lot of people struggling. If you have the opportunity, please give out a helping hand. The number of people using food banks has grown considerably in the Toronto area. If you have an opportunity to drop off some non-perishable goods, please do so. Give a helping hand. There's a lot of people out there that are struggling, and if you have that opportunity to help, please do. And on that note, I want to wish everybody a great end of the week. Take care. See you next week on episode 155. Take care. Bye.